Hey, good morning, everybody. And I say good morning because we're in California, and I know we have people from all over the world that are on this morning. My name's Rob, and I'm just going to introduce the program this morning, give you a few highlights. Can somebody type in the into the answer box or the question box that you can hear me? Just put a Y if you could. Just want to make sure everybody can hear. All right, very good. Thanks, Paul. Randy, thank you. All right, we're going to kick off this morning. We're going to do things pretty much the way we normally do. And so Shane's going to be kicking the thing off. But before we get into that, I want to let you know that if you've got a question, for those of you that are brand new on with us, if you've got a question and you want an answer about a trade that you're in or a trade that you're thinking about or a currency pair, we're happy to review those if we have a chance to get to them. So please give us your bias direction or the time frame that you're in, the currency pair, and the time that you're using for a bias direction, and then your entry time frame. So that way we can do, maybe, hopefully we'll have time to do a top-down analysis on that. I know Wade's going to do some of that later as well with some currency pairs he's looked at. So let's make sure that we do that. And for those of you that are new on, we try to keep this to a teaching, training kind of webinar. So if you have a technical question, you want to make sure that you send that over to support@tradeats.com, and you'll get your help, technical help, whatever you need there. As well as if you have a question that you asked and it didn't get answered here in the webinar this morning, then we want to make sure that you send that over to support as well, and you get your question answered. So with that, I think that we've got everything covered. So the first thing we're going to do is we're going to turn it over to Shane, and he's going to go through the latest volatility report. Shane, take it away.
All right, thank you. Hello, everyone. Thank you so much for being on. So this is going to actually be a pretty straightforward. And actually, before I get into the volatility report, we didn't actually double check with everyone like how they liked the kind of what we did last week with me and Wade kind of kicking back how we make the volatility report. So I'd definitely be interested in how that went over. So I did get some emails. Some people seem to enjoy it, but if any of you guys want to type in just whether you thought it was useful or just any thoughts about how that went and all of that, I'd be more than happy to read through some of your comments if if you'd like us to try and do something along those lines again. Anyway, so that being said, to jump into the volatility report, I'm just going to go over this one real quick. Probably the most interesting one was dollar into the franc. So this one we did not have a directional bias on it, and reason being because it just broke out of the bottom of the weekly box, and it was pretty whippy throughout the week or throughout the last few weeks. So we really want to wait and give that a little bit of time. Otherwise, we do have a clean rotation to the short side, but again, since we just broke out the bottom of the weekly box, it probably needs a little bit more time to set up. Then our next one, or our next two, actually did continue long: pound franc and Aussie New Zealand dollar. So let's go ahead and jump into pound franc. So very standard stuff, as a lot of you know. When price reaches an expansion line that has not been touched before, there's tends to be a little bit of turbulence that you're going to find on some of your smaller time frames. So that would account for some of this that happened in here. On our smaller time frame, you can see where it kicks back and forth. I do get questions from time to time on how long an expansion line is in play. So I just wanted to address that real quick. You're going to find that expansion lines are more reactive to price when price hasn't been through it yet. So in this case, remember, the expansion lines, they represent orders that are placed. We don't know exactly whether they're longs or shorts, but as price broke away to the short side, it came through. So all of these sell orders are still in here. We have to assume that for the most part, most of the longs are out because they've already, price has already pulled away quite a bit to the short side. But then we come back up to the long side, and now we're running back into that. So as price whips back and forth, most of the orders are going to be taken out. So that's going to be a less relevant line. So anyways, that being said, we come back to an expansion line and we can expect some sort of reaction, especially the first time that it comes up through there. Now let me go ahead and jump over. We'll take a look at Aussie New Zealand dollars. So we also had a long bias on that. This actually got featured on the volatility report way back here at the very low when it broke out, had a nice rotation, and that it's just continued pushing. Let's go ahead and just spend one moment looking at this. So it looks like we broke out a little bit further to the long side. We took out some liquidity. This is probably not the best time to jump in right after liquidity. We want to give it a little bit of time just to see exactly how it's gonna play out from here. But getting a nice little pullback, we'd probably want to wait for another expansion line and to see exactly how it's gonna build from this point. So one more expansion line, be able to control our risk. If we were to enter a trade now, we're 42 pips away from the most recent expansion, and if it gets down to there, we're probably going to at least take out this liquidity line, and then maybe we'll see that snap up. Anyways, so again, pretty straightforward volatility report for this week. And there actually is one thing I wanted to add. A lot of markets are moving right now. So this volatility report was a little bit difficult to make in that a lot of things are moving. These were just the examples that I was able to find that were a little bit closer to recently breaking out of the box, but there's a lot of movement out there. If you look back at maybe last week's volatility report, a lot of those pairs are still moving. So there's a lot of opportunity. Don't feel like you have to stay just on these for this week in particular, because there's a ton of movement. Anyways, that being said, I'm going to hand it over to Wade.
All right, thank you, Shane. Appreciate it. Guys, give me 1 sec. If you could, in the meantime, I'm gonna get my screen set up. Can you guys just type in a Y? Let me know you could hear me. And then give me a moment here. I'm gonna get all set up. All right, thank you guys. Appreciate it. Looks like we're good to go here. Hang on, just gotta get my screen up here. Okay, I think we're good to go there. All right. So I was going to be going through and doing some general top-down analysis. I don't really have anything pre-planned to talk about for the most part. As you guys know, we've been just basically using all of our waking hours to try to get the update ready to go and finished up. If you want, actually, what I'll do is I'll give you guys a quick preview of what it's looking like here in the final stage. I think I have it saved under this. Yeah, I think it's. So this is the new ATS 3.0, and this is pretty much the exact way it's going to look. I don't think we're going to make any more changes to the visual of it, so you guys can see it's pretty much everything's done on it. The dashboard's done, so it's all everything's working really well. So the indicators part of the update for you guys that have been with us, and been following along as we're trying to get this thing ready. The indicators, I don't have the expansion index on this particular computer that we do the webinars on, but or right this moment, but I do have this one. But the indicators are pretty much 100% done. The only thing that has been the holdup has been the licensing system, and been going back and forth with Shane and our coders just trying to test it, because it's a much more robust system than what we've been using. So it'll be much more user friendly, but there's just a lot more that goes into it. And we wanted to actually release it on the 1st. We wanted to release it yesterday was the goal, but We just felt that there was still a couple little bugs that we needed to work out, and the last thing we want to do is put it out there too fast and then it crashes, and then let's just put it this way, it'll get ugly real quick if something breaks. So we want to make sure that it you know, everything works and that you guys have zero downtime and it's just a seamless transition. So you know, want to make sure there's a good user experience and that you guys are good to go on that. But anyway, the indicator is pretty much done. It has all the same, pretty much the same settings that I had put in it before. It has the money management settings here, and you guys are going to be able to adjust all the colors. It's all in there. So there's a lot of flexibility. These are the default colors that we picked that are on here, but you guys can change them if you like the red and green or whatever you want to use. It's all there. It has the different candles. So I know some of you guys have been waiting for regular standard candles. You'll be able to just go right here to the drop down menu, pick standard candles, hit OK, and then it'll load up and you guys will have standard candles if you want that. I personally prefer Heikin-Ashi, always have, just because I feel like they're way less noisy. But those of you guys that are just, you know, really used to standard candles and like them, well, there you go. You guys are also going to have, oops, let me, there we are. Hang on, sorry guys, I got my stuff all messed up here. So you have standard candles. You guys are also going to have HA standard. This is a hybrid candle, which is pretty cool actually. The hybrid candle has the same colors as the Heikin-Ashi, so it has the smoothness of the color. So it'll change exactly the way Heikin-Ashi would, but it actually shows the bodies of the actual just standard candles. So you get to see the price action of a standard candle, but the stability of the color of Heikin-Ashi. So I think that's gonna be pretty cool. You know, and then we'll just have, you know, the regular standard Heikin-Ashi candles as well. You know, so get that switched over here. There it goes. Anyway, so that's it. Just want to give you guys a quick preview on that. I'm probably going to go ahead. I'm going to leave, or I'm going to go back over to the 2.0 version just to do our analysis on. But I just wanted to give you guys that preview and let you know it is here. It's real. I know that we've been talking about putting out the update for a long time, but it's just, you know, the old days we didn't have quite as many people on board, and we could just put stuff out, and if we had to redo something, or, you know, there was a bug, we could fix it. It didn't affect so many people, but now it's, you know, we need to make sure things are pretty much perfect. So just a lot more goes into it. But anyway, just wanted to share that with you guys. So I'm going to go ahead, I'm going to switch over and I have a couple of pairs that we're going to take a look at. So okay, so the first one, and if you guys have a pair that you guys want me to take a look at, you can. Just give me the supporting time frame and and your entry time frame and the currency, and I'll take a look at it. We had a request early on to look at CAD yen from Michelle, so I'm going to start with that one. It's a week into the 4 hour for the time frame. So let me get that pulled up here. Whew, man, look at that trend. So we got the 4 hour over here is our entry. Okay.
This is what I was referring to with lots of other pairs moving quite a bit. So there's lots of, this is not a single incident. A lot of pairs are like this right now. Lots of stuff is moving.
Yeah, man, this is, yeah, this thing. So just generally looking at this, there's no trade right now. This is already gone. You have no architecture up here. If you just buy this market, you know, your last reference point is down here with these two expansion levels. So as of right now, you don't want to do anything. If you were in the trade, you know, your opportunity, if you're trading the 4 hour into the weekly, was as a weekly turn green down here, was your first grade A opportunity. Boom, come up through, pretty standard stuff. Rotation, come up through, average price, and that's when you're into the profit, and then you're riding the weekly direction at that point. Now, I do know that may have been, I don't know exactly what price level it broke out at, but you were in a weekly box here. One thing about trading into the weekly, though, is that the weekly is such a big, stable time frame that you can, if you don't have to do this, but you can get away with trading the weekly even inside a box, especially if you kind of feel like there's going to be a breakout to one side or the other. You can still trade that in the box, just because there's a lot of pips in a weekly candle. You know, so if you wanted to get into that, you very well could have, but as of right now, there's no trade on it, but there was a great setup right here. I mean, that's really what the grade A opportunity that you're looking for to try to navigate when you got your first color change on a new direction on your higher time frame. This is your first pullback. Wait for the rotation, you know, test the entry, boom. I mean, that's because you're really just betting on the follow through of the weekly. But anyway, that was pretty good. We covered the gap from this liquidity level all the way up to there. So just boom, cover up there. But yeah, it was that this is a long time to be in a trade. So, you know, even if you got it from here to up here through these liquidity lines, that was still a good opportunity right there. So even if you missed this one. Now going on CAD yen, now that we're talking about it, let's jump into the 4 hour and see what this looked like on the 15, because you're still trending on the 4 hour, at least at this point. Now it has gone quite a bit, so I'm sure you're going to be into grade B opportunities, which you need to be careful on. But yeah, there you go. Under expansion, rotation, you know, you're betting on every expansion is going to expand upward in this direction. So we're not trying to guess, we're not trying to call the turn. What you're looking for is you're looking for a trade on your higher time frame that's already in progress. And it really comes down to, are you above average price? You above your last expansion right here, green above, green above. And what was magical about what happened here is that you're in alignment with the weekly chart. So in a situation like this, you know that the weekly is green, is going up. There very well may have been some opportunity going short right here, but you could see that predominantly the movement was going upwards. And that's because the weekly direction is long. So when you're weighing out probabilities and the things that you guys want to trade, it's something to think about. Again, you guys, this is just my opinion. You guys could do whatever you want, but when you get the 4 hour, if you're trading the 15 and the 4 hour, or even the 5 into the 4 hour, when you have the 4 hour chart line up with the weekly direction, that is going to be usually more significant probability wise than a 4 hour against a weekly direction. Now, I know eventually a reversal will come and the 4 hour will turn before the weekly, but we're not trying to call reversals. What we're trying to do is we're trying to call safe momentum. That's really the confirmation. You know, this trade is already happening on the 4 hour, and what we're doing is we're looking for short-term expansions to get better trade placement and management within this move. You see the overall up move. When you get an expansion and you get that line, this gives you a point of management to enter that trade. Because at the end of the day, when you get a box, you can almost think of boxes like houses. Like let's say you're looking at a real estate market, and you know that in a certain neighborhood or a state or the country, you know that or let's just say state, you know, in that think of the state is a currency pair, right? The state of where the house is located. You know that everything in that state is going up, you know, or even let's take it down, you know, in that city, because I know there's some cities and states that are nothing, so, or that aren't going to go up as fast. So think about it, it's the fastest growing city, and there's new housing being built, right? You could think of that, you know that the market's going up. This represents the housing economy, right? This is the general trend that prices are going up, right? You could think of the blue is a new house that was just built, and it's getting built in a rising value home value economy, right? So what you do as that house gets built, it gets built at this price, and then these are people trying to bid on the price of the house, right? But they know that the value of this house is going up because the overall market is going up. So if you look at that, it's like you're almost buying a piece of real estate at that price with the expectation that the value from that new home that was built is going to go up with the with the local economy. So I don't know, it's just a little thing that sometimes what I found, and this is over a lot of years training and trading with people, is that sometimes we come up with different ways of thinking to put trading is such a weird thing, because it's like, look, the money is right there. Like, you just look at all that movement. It's like, it's right in front of me. I just got to grab some of it. But as you guys know, trading is very difficult. You got to manage your risk. You got to come up with what's probably going to happen, and you got to hang in those trades. So in hindsight, it looks, oh, so easy, but it's not that way. You really got to know what you're doing in real time. But we found, like, if you come up with kind of analogies to get your head around that are more likened to like real, regular daily scenarios, it sometimes can put things in terms that your mind can get around better. For instance, another analogy that we used to use quite a bit was engaging with a customer, or like if you're in sales, you talk about high probability customers, right? And so you could think of a defined trending market on your higher time frame like this, something that's in line with the weekly. It's clearly trending, especially after you had this first leg. As it turned up right here, you can see that you're trending. You can look at the weekly, you can see everything is moving up, right? So this is a clearly defined environment. And then these are your customers, right? And so if you're in sales, you could think of, like, if the market is bad and it's whippy, you could think of that as like spending your time trying to sell something or work in something that's a very low probability situation. Like, if, let's say, you were selling cars, right? And someone came into the dealership and they says, I have no money, I have terrible credit, I can't buy a car if you wanted to, but can you show me everything you have on the lot today? I really just want to drive some cars around. Well, that salesperson would know this is someone that they can't buy a car, and it's not a wise use of my time, as a professional salesperson, or, you just know it's a low probability customer in general. Now, there may be that proverbial bum that walks into the dealership that buys a car cash. So we've all heard that story, right? But, overall, that this is you want to be nice, but this is a low probability way for you to spend your time to make money. The markets are similar to that. Is that, when you see the environment is right, then you want to engage with customers that have a high probability of paying you. You choose what you spend your time on. So if you think about that from that standpoint, when you see an expansion come along like this out of that box, this is a customer that you want to engage with because you see that the environment's right. This is like someone coming into the dealership saying, I have cash, I'm ready to make a purchase. I just need to see a car or two. I pretty much know what I want. Would you please show me around? You would say, heck yeah, because that's where you're there. You're there to sell cars, right? So that's one way you can look at it, is the market environments are those, and the opportunities. You have a situation where you can look at that opportunity. You can look at the climate it's coming in and decide, is this a customer that is worth my time to engage with? Because the minute you click into that trade, it is serious business, and now you are married to that trade, and you need to see the opportunity through. So, if you really gauge the quality of the environment that you're trading in, the trend, how much do you understand what's going on? Is it clear? Those are things that are going to make your job a lot easier in the long run. And then, like we said, you're engaging with better customers. You're not wasting your time spinning your wheels just to be busy. It's more high impact work on your part. So anyway, just a little thing. I didn't mean to get too spun off into that story, but anyway, me and my dad were talking the other day about engaging with customers and doing that. We're actually working on a new kind of beginners course that we're going to put out just to help people get started in the industry. And we were thinking about those old analogies we used to use and all that stuff, because they were useful, and it really helped people kind of get their mind around, like I said, if you could put it into some terms that you are more understandable, then Sorry, phone's ringing. Then you guys can sometimes do a better job at waiting for good opportunities. Is kind of what it comes down to. So let me see. We got a few more currency pairs here. I'm going to take a look at euro yen. Take a look at that.
Just to piggyback off of Wade's point, something that a lot of you might find interesting, as we work with a lot of people, and we've worked with quite a few people, at this point, we find that most of the time, if somebody's not doing well with their trading, it has more to do with emotional intelligence than it does actually getting into trades and knowing where to get in and where to get out. That part kind of works itself out fairly quickly. And then it just kind of comes down to, somebody gets up and they're having trouble in their life, and then they jump into Forex thinking that they're going to get, a win there. And it's not usually how it works out. But yeah, most of the time it usually comes down to the emotional aspect of it is really where it separates people and whether they're going to succeed with it or not.
Yeah, it's it's such a funny thing, because we've had very successful people that have had very successful careers excuse me, had very successful careers otherwise in other business ventures, owned businesses. The people we've had the privilege of working with over the years, pretty crazy. But the thing is, like, they just because they've been successful in some other area, they come to trading and sometimes feel like, I know how to work hard, I have good judgment, I've already made money, I've been successful at these other things, and they come in and they just get beat up and they cannot figure out, it's like, why can't I translate my work ethic and my success into this? And it really comes down to, like what Shane said, it's just the emotional intelligence side and understanding, that this is something that you have to be patient and you have to wait for the opportunities to come to you. You can't, just because you'll work hard, you can be on the screen ready to go, but there's not a qualified customer. Like what I was saying before, there's not an opportunity that makes total sense to engage with. And sometimes when you've been successful in other things, you're used to going out and making it happen. It's like, I'll outwork everybody. And you just go, and that just doesn't work for Forex. You have to sit and be patient. If there's no trade, there's no trade. Or if you test an opportunity, and you're in there and it doesn't work out, it's not because you were dumb or you didn't do something. It's just one that didn't work out, and you got to sit up and wait for the next high probability opportunity to engage with. But anyway, it's definitely interesting how that goes down, and working with people over the years that had to deal with that. So.
Hey, Wade,
Yeah.
this is Dad. Hey, at some point, I'll tell them the story about when we first started trading, and my first trade was 10 lots because some broker talked me into putting 50 G's in an account because I could. We'll tell you that story sometime. I had sweat rings clear down to my belt loops and about lost my mind. Anyway, that's a story for another day.
Yeah. It's we had an interesting upbringing in the whole thing. Yeah, let's just say the first account we ever funded was, it was a decent amount of money, and I don't think any of us had seen, $1,000, $2,000 evaporate that fast. It was like a gas pump going negative. So this is a long time ago, but anyway, that's a story for another. Someday I'll make a PowerPoint and tell you guys the origin. Let's just put it this way: all the lessons that we say here, again, we're a software company. This is a tool that I created, that I use myself. I allow whoever wants to use it to use it. If you guys see value, I'm not forcing you guys to use it, but the lessons that we talk about have been bought and paid for. So do with it what you will. I'll just leave it at that. So anyway, let me get into the analysis. Let's talk about some markets here. Euro yen is one here. So let me see. We got the 1 hour into the daily. It's a good pairing. Okay, again, yeah, like Shane was saying, markets are pretty extended. You guys can see what was going on here. The daily, this is, again, guys, it's the same thing over and over and over again. You got your higher time frame, you're above right here. You knew you were above the minute you got over right here on the breakout. 2 days going against average price, leave those alone. Green day right here going up, and I bet you the weekly is long as well. So what happens when a daily lines up with a weekly? You know, there you go. The weekly is more of a breakout right this very moment, but the weekly color, let's just put it this way. If you want to break it down really simply, and this is, I'm talking like basic things for you to get your feet on the ground with trading. If the weekly candle, let's say by Tuesday, is green, right? Then you know probably Wednesday through Friday, any big moves are probably going to be to the upside, because that is the direction of the week. The weekly color is not going to sit there and go green, red, green, red. It's not a 1 minute candle, right? So if you know the direction of the week, and you're relatively certain that if it's Tuesday and say the weekly is red, that by Friday there's a high probability the weekly will still be red, then let's work backwards. You know that every day, Monday through Friday, or let's say Tuesday, you wait for a Tuesday just to see if the weekly didn't reverse on Monday or you know, when the market's open. You know that there's a high probability it's in a downtrend, it's in a stay red. You know that the days that are going down red, especially with expansion above on the daily chart, those are probably going to be significant trending days that'll translate down to your 15 and 5 minute time frame for entry, right? Those are basic observations. Forget the software, you know, forget what ATS and the intricacies of that. Take that with you wherever you go, whether you use our software or not. If you can identify the direction, the probable direction of the week, then you can eliminate the other half of the market, because you know it's like this week is a selling week. High probability it's only sells. So what you're doing is you're eliminating half of your mental work that needs to be done. All you know is this week I need to be focused on being the best seller of the market possible, and you eliminate the buy side. That's where you put probability in your favor. Now, if you are going, I'm buying today, I'm selling today, I'm buying, I'm selling, I'm buying, then you're gonna lose focus, because when you keep changing your directional bias, which is your market sentiment, and I don't even care if you're wrong, it's better to keep a directional bias even when you're in a reversal, because overall the directional bias, when you get weeks that go 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks before you had a rotation, that's 9 weeks of, you know, what could be consistent trades in one direction. You know that, especially using Heikin-Ashi candles, you know, widely available indicator. Why, when you can see something that is that just as something as simple that is that continuous, why would you not put that in your back pocket for your trading toolbox to know the week's trend? When I know a week is trending and I'm pretty certain of it, why would you not eliminate the other side of the market? If it's trending short, ignore buy opportunities at all costs, just ignore them. Why would you not do that? Because at the end of the day, it's not about how many trades you're in, it's about the quality of the trades you're in. You know, and so to know that the probability of it trending short for the week or trending long for the week, you know, and ignore that, and then you're in a, let's say the weekly is trending short and you get caught seeing a long position, and let's say, you know, it goes long on you and it's all good, but then you're paying attention to that, and then all of a sudden it starts going against you. You can't get amazing trade placement and work an opportunity when your bias has changed, because the minute you're in a trade, that's like your horse. You're betting on your horse, even if it's the sickest, slowest horse in the race. Now it becomes your horse, right? So you just like, it's gonna win, it's gonna win. It's like, no, the direction of the week was short, and you're long. End of story. So, you know, you're never going to get the good trade placement when everyone else, when the daily's going long, the 4 hours going long, and it feels like it's a reversal, you're still sticking with that weekly direction. You're like, oh, no, everybody thinks it's going long. Sure enough, it stalls out. You're looking for your trade. You're looking for your trade placement. Boom, you nail it. Everyone else breaks. They realize this is not the long-term trend. It falls apart, and you're in the right side of the trend, set up for a much bigger move, possibly. So anyway, just scenarios I'm throwing out there. I don't mean to get too far off topic, but these are simple things. Direction of the day, direction of the week. I get if it's like really whippy in the market and you can't really discern what's going on, then you feel like you want to trade both ways. But honestly, if you can't really discern a clear direction, should you be trading at all? You know, it's just not a good environment. It's back to the whole customer thing. You're going to get customers that they're not buyers. They're not worth your time to engage with, right? But a situation like this on Euro Yen, right here, you had the breakout. You know, it was a clean breakout. You had a settling right here, but you could have still traded the breakout. You'll see that this candle turned red. You had a green one right here. And is this not, I mean, is that not what we look at every week? You know, there it is. There's you know that the market's rising. Let's go back to the house analogy, right? Market's rising, you got the breakout. Let's see. Okay, so this was the breath right here. This is those couple of down days. So it broke out right here. These are the market is rising. The property market is rising clearly above expansion, moving away. Doesn't take a rocket scientist to see that. Here's a new house that was built. The value drops below value. You know it's a good time to buy because the overall market is rising. So if that was a house, you would own it down here. You got it at a good deal. Boom. The value of that property increases. Here's another house that was built. You know you're getting here's the value, the build value. You know that you're getting it temporarily under value. Boom, it goes up. Now it's above value. Does that make sense, guys? I hope that that's a good analogy and I'm not confusing everybody. It makes sense to me, but it's just, I don't know. You know, here's another home that's built. And now here's the value of that home. It's below value. You're buying it again because the market is still going up. Boom. You sell it up here. You buy it. Here's the home. You buy it here at a lower value. You sell it above value. So, but anyway, there was decent entries. Is there an entry in Euro Yen right now? No. You can see it's done. The last one was right here. You know, trying to get above. You can see that we were aiming for this price right here. Buy the rotation. If this is a pair that you're looking at, you buy the rotation. Now you see you got a box, but see how you broke out of the box and now it's holding above the expansion here. That's a good sign. Now you're above expansion. It's getting rejected off that expansion to the long side. Those are clues in your favor. That's still supporting this direction. And there you go. You're eventually looking for a break. Now, one thing that you guys that you may ask, like, you know, if you buy it right here and it gets to here, you know, you're up like, let's say 20, 30 pips, you know, on the move. That's like 25 pips from the turn, but you probably didn't get it there. You probably got it up here realistically. So like you're up like 10, 20 pips. Sometimes some of you guys may ask like, well, should I just take the money and run? But really, what you're really looking for, remember, this is your trade over here. You're really betting on the fact that you're going to get continuation of the higher time frame direction. So when you get an entry, really the fulfillment you should be trying to really look for is something that pushes the daily. You know, if you're trading the hour into the daily, and what I mean by that is when you get in the trade, that whatever the high on that candle is, or the last candle, you want to push past it and get a push to a higher wick. Like you're really looking for, you know, a significant break above and beyond the relative expansion that you're trading against. So, you know, that's something to think about. Is like you don't want to just cover with 10 pip trades and you know, walk away, especially on this type of high time frame. You really want to trade within the daily candle, and you want to see that the daily has, you know, made a significant new high or a significant new low before you're real satisfied with a profit. Because if you do need to take a few hits, figuring out where the best entry is, or if the direction is going to hold, you know, you don't want to take, 2 15 pip hits in a row and then take a 10. You really want to make sure that you're going to get that follow through, or that you're still feeling like the higher direction is going to pay you. So let's take a look at a few more pairs here. And we had a question earlier, what's the difference between Heikin-Ashi candles and regular candles? The biggest difference, there's two differences between Heikin-Ashi candles and regular candles. Number one is the color. The color holds much more stable than a regular candle, so it's not constantly flashing red, green. So the biggest reason why I've always used Heikin-Ashi is just because for seeing the market cycles, it's just much smoother, to see the rotate. We're not trying to get the wicks. We're not trying to compare candle against candle, and all the candle formations and the tack hammers and I don't know, all those names everyone has for candles. We're not trying to do that. We're trying to just see the whip. We're trying to see just the overall turns and rotations, and we're trying to look at the market overall. And I feel like I've always found Heikin-Ashi candles are just much more sound overall than doing that. Now, I do know that they can lag when you get a fast rotation. And you may feel like, oh, I could have got such a better entry by using a regular candle, but that may be true in some circumstances. But at the end of the day, how many times would regular candles have thrown you out of a trend early, especially if you're using multiple time frame analysis? The regular candles can feel like they're running out of gas much more frequently, whereas a Heikin-Ashi candle will show you, no, this is very stable momentum that's going on right here. So I feel like that's at the end of the day, that's more of an edge, is being, having the probability of staying in a much bigger move than getting a few extra pips on an entry. So just my opinion. Anyway, that's really the difference. And the second difference is just the way the bodies smooth out. Again, just kind of contributes to that smooth look, and it's just overall better at seeing the cycles. But if you guys like real candles, we're going to include them in the update. We got some people have quit ATS because they simply couldn't understand Heikin-Ashi candles. I don't get it. I feel like if you can't understand Heikin-Ashi candles, I don't know how you can get raw candles better. But I think it just comes down to a screen time thing, and I can't argue with that. If you have thousands of hours of screen time or hundreds of hours, looking at standard candles, then that's going to be a hard habit to break. And you're probably to some degree used to managing the noise of those candles. Now, if someone was brand new, to trading, would I say, here, go get regular candles and have at it? I would probably say, no, start with Heikin-Ashi candles. It's going to keep it you're going to be in less trades. You see the market, what I feel is a little bit clearer for at least the type of trading that we do with ATS. But again, that's just my opinion. So I don't want to discourage anyone, from using what they're comfortable with. So that's why we're going to include those. Let's see here if we got some more questions coming in. Actually, I'm going to catch up on some of your guys' questions. I've been rambling on. Shane, if you want to add anything to what I've been saying, feel free. I'm going to take a minute to read up here. So give me 1 sec, guys. Okay, looks like we're gonna got a request to check out gold. So let's take a look. I actually haven't looked at gold in a while, so I'm actually interested in seeing what we got going on. Okay, and we got gold, and it's, let me see, the time frames are, I think it's a 15 and the 4 hour. Okay. So if you're trading the 15 and the 4 hour, this is your first candle that you're below expansion now. If you want to look at the rest of the expansions just to get some context of the situation, So there's a couple of master cycles I see forming right here. We had a swing high, swing low, but we haven't really completed the swing high because it would have been over this top right here. If this one was the true one, this one is a little more centered. We have a swing low, swing high. So there's a lot of expansion going on here, just general back and forth multi-leg expansion that's going on in here. So I'd be interested to check what the higher time frames say. So let's look at the weekly. Okay, so this makes sense. You had one red candle, now you got a green candle. Those two candles are going to tell the story of what's going on in that environment. That's for sure. Green candle, we've already had a pretty big run up. You've come through liquidity line. See, we hit those, had a huge sell back. Hit this liquidity line, had another sell back. So I would not be surprised if it doesn't keep ranging out. On the weekly time frame, it just doesn't look that great. Usually, like I said, if you see the weekly is just developing smooth momentum, especially if you're close to expansion like this, you're coming out now, you're getting that nice momentum rotation. I understand that you can't really, you're not going to know that until it's going, but the closer you are to expansion, the higher probability you are of catching a move away from that expansion, as seen, throughout all these right here. This one, you're pretty far away, and gold, in my opinion, hasn't really been a good trade for a little while. Since this whole, market started crashing on the Dow markets and everything, it's really hasn't, been that great. The spread got crazy, at least it did on FX choice. It started whipping around just really unpredictably, just because the volume was so weird, at least in the CFD market. So, I don't know. I would, just my opinion, I don't think it's a great trade overall, or I don't think it's a great climate. I think that there's probably better things out there. I would wait to get a new box on the weekly and then expand out of that box and then see where you're at. So, okay, let me go through here. Sorry guys, we just get blown up with comments through here, so sometimes I got to sort through them. Takes me a minute here. Okay, we had someone wanted us to look at Aussie USD. Okay, so and the time frame was from Tom was the hour into the 15. That's a little close. Not sure if you're new to ATS, but it's a little close on the hour into the 15. You can use that to help with momentum. If you're trading, the 15 in the daily, you can look at the hour sometimes, but as far as like getting a stable directional bias off of the hour into the 15, well, let me show you kind of what I'm talking about. It's in a situation like this. This is a good example right here. You can see that we had this would be the trend is going up. Obviously, this is something that's already moving. You had a possible entry down here, but at that point the market was still pretty sideways. So most of you guys probably would have tried this one right here. You can see that you're taking it on the rotation, trying to break through that expansion. It gets through. Now you're above expansion, then it goes into a run upwards. That's what you're trying to do. But realistically, this situation right here, where you see the hour going up and then you see these small candles form, throughout what was this breath, that's pretty difficult to ride through right there. And what can happen is if you have the 15 in the hour and you're using the hour as your directional bias, you're not going to have as much confidence to stay in this trade right here, because it feels like the hour in that moment is kind of running out of gas. So, and it ended up taking off. But look at, if you get a bigger separation, see we have the 15 and the 1 hour, now let's separate it by more. Let's go to the 4 hour. Much cleaner. So you can see this run, it just feels like, no, the momentum is still here. So, and that definitely got you in, you know, much earlier too. There was more opportunity here. We got a little choppy, but you should still be long even throughout all that. You know, there's still, you're below expansion, back to expansion, below expansion, back to expansion. You know, and this is pretty choppy. This is one of the more difficult markets, but you know, as long as you're using good money management according to your account size and, you know, whatever you're trying to do, you know, you should only be long, even if you got to give it a little bit of room. You know, and maybe test a couple of entries. You know, eventually that direction did pay you. And probably, you know, just by looking at the 4 hour, let's take a look at the weekly, you know, pretty clear. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 9 weeks you've only been long on Aussie USD. So every time the 4 hour lines up with that weekly direction, you could have just a little more confidence that 4 hour is going to have the follow through you need to hit a home run, you know, that you're looking for. And I know that it is against the last expansion. So some of you guys might be asking, well, isn't that against the rules? Well, can you trade against? If you're trading a 15 into a 4 hour, you're really looking for, you know, the 4 hour to surpass the previous candle. And you're looking for the 15 to go into a significant run, you know, similar to this. That's kind of what you're banking on playing out when you're trading the 15 and the 4 hour. So the weekly, you know, that even if you're against expansion, you're talking about a whole week of price action. So, you know, this is just to look at simple things as, like I said, the color, you know, there, even if you're trading against expansion, there could be a 200-300 pip, you know, range within a week or within a weekly candle when it's all said and done. So even if you're against expansion, you know, that you could still trade against use a weekly as kind of a extra confirmation if you want, because you're really not trying to ride the weekly. You're just trying to help with the stability of the direction using the weekly color. So you get away with that. Now, if you're trading the 4 hour into the weekly, something that this would have been a little bit more difficult to ride, because if you're trading the 4 hour into the weekly, what you're betting on is that you're going to get follow through and you're trying to ride the weekly. So a 4 hour entry, if you're trying to ride the weekly, could easily turn into a position that you're in for a week, 2, 3 weeks, right? By the time you really see a big enough profit on it to feel good about it. So that, you know, you got to bet on the fact that you're going to get 2-3 weeks in the same direction. So this would have been a much riskier situation just trying to ride the weekly. But, you know, that's where you just get that separation and in time frames, and you just got to weigh out the probabilities according to, you know, what you want to do. So let's see here, guys. We're probably going to wrap it up pretty soon. Want to keep it down to around 11 a.m. here. So let's see what we got coming in here. Shane, if you got anything to add, you can too. I'm going to take a minute here to catch up.
Yeah, there's a question here from Brent. Brent says he just wants a little bit more explanation on the liquidity lines and how they enter into decisions to enter and exit trades. So the liquidity lines really depend on what phase the market's in. So inside of a profit, you know, the trending phase, they tend to be the targets that the market's going to move to. So we can see an Aussie dollar right here. We pretty much, on the weekly chart, we did not take out a red liquidity line for months because as it was pushing down. So we can kind of define this, you know, that's the type of behavior when it's in a more trending phase. Whereas in the expansion phase, you're going to see price more indiscriminately snap through each side of the market as the liquidity is taken, you know, used by the institutions to place their own trades. So you can kind of see that if you look at the 15-minute before it started pushing up to the long side, it starts snapping through both sides of the liquidity. So there's a certain behavior that again is mostly dependent on what phase the market's in.
Yeah, I think like Shane said, the best use of liquidity lines, you can use them like, you know, what you're looking for is you're just looking for a rotation mostly on the candle to get into the trend. But if it even helps, like if you saw this rotation and you see that it simultaneously has taken out liquidity and it's turning off that level, well, then this rotation right here would give you probably a little more confidence to actually take as a trade. if that makes sense. So rather than getting one that didn't have any liquidity, like for instance, right here, you see that this drop back, we had this turn right here. You could have still got in, because this very well may have been the trade, right? This, you know, would have been the only time to get in, and it just went. But you see that that one didn't go. It didn't get through expansion. So that's where the first, if you did get long right here, you just say, okay, I got to get through expansion. Never did. It got rejected off that. So that's a clue. You may want to dump it right there. And that came down through. Now it tagged that liquidity line, and you got another rotation. So if you see that, you very well may want to get back in right there. You know, and this one did get up through expansion, but ultimately ended up rotating out of that level. Again, this is an entry you would have tested. Cut it right here, because it's not holding up above expansion. It's probably still a break even. So in reality, to catch this move right here would have taken you one right here. There's a clue it's not making progress. We'll call that a break even or a small loss. This one rotated off liquidity, get in at the rotation. This one you saw a profit on, it got through expansion but didn't hold. It dropped back. Another sign that you may want to let it go, depending on where your trade placement was. Let it go, a break even, maybe even another small loss, but that's you're looking for that continuation. You get below expansion again. Remember, you're not going to trade up above expansion. You get down below right here, another turn off of liquidity. So that's 3 entries, but this one knocked it out of the park. And this is all, you know, providing that you feel good about the stability of direction. That's going back to what I said about the 1 hour chart. This is going to be a much harder to navigate. And if you're looking at the 15 into the hour, you're going to, you know, in a situation like this, you may start to feel like, oh, I want to sell this market. But if you're looking at a higher, more stable time frame, you're still thinking, I'm going to buy. I'm buying here, I'm buying here, I'm buying here, and I'm eventually looking for this. Because at the end of the day, you want to see the continuation on the 4 hour. You want to see that 4 hour kind of burst and break through and see the trend follow through on the 4 hour. That's really what you're fishing for. So, okay, I'm going to look at one more. We got euro pound. Let's see here.
Wade, real quick, there's a question from Rick. Rick says, when you're looking at the architecture, do you ever bother about a pattern that the price action is forming? Like if the price action forms a triangle or pennant or something, do you consider that at all within the context of the market maker's business model, 3 phases, or do you ignore it completely? If I could add into that, we mostly ignore stuff like that just because if it doesn't have anything to do with liquidity, or you know what orders the institutions or market makers are holding on to, then sometimes it can get really confusing. So for the most part, we mostly stay away from that stuff.
Yeah, absolutely. To try to get you know, to look for more confirmations and look for more patterns and things, you know, and I'm not saying, you know, we're not, you know, if you guys, you always notice, I just say, this is my opinion. You know, I'm not trying to be your trading guru. I don't want that position. I don't care to be, you know, I'm going to give my opinion on the software. You guys could take it or leave it. If it doesn't make sense to you, you know, you guys are more than welcome to unsubscribe. It's, you know, that's what we make it an easy process to get involved, you know, and, you know, I'm hoping that what I say rings true to a lot of you. I think it does. You know, but at the end of the day, I do know that you guys come from looking at patterns and looking at that stuff. If that helps you and you have found, you know, success with that, and you know, then by all means do it. You guys can do whatever you want. You know, if you know, looking at that stuff, I've found over the years it kind of detracts from the simplicity of what the market can be. At the end of the day, you know what, I'll tell you guys, this is again my opinion, but after looking at these charts for over 10 years and working with a ton of people and seeing their ups and downs, you know, having my own ups and downs, I'll tell you there's one significant truth, that if you can, whatever trading system that you're using, whether it's ATS or not, the fact that markets trend, being able to clearly identify a trend and then being able to have a method of entering that trend efficiently at the end of the day is really what I found is the best trading system. And this is after spending tons of time, tons of money in creating automated systems, going down every rabbit hole you can imagine. You know, I spent thousands and thousands of hours researching and going through. I looked at charts when the markets were closed on the weekend instead of doing fun things. Like I was obsessive. And the only thing that I landed on after all that, literally, I'm not even exaggerating, thousands and thousands of hours, was the fact that like simple things like I told you, Heikin-Ashi colors green, you know, it's going up. Heikin-Ashi colors red on the higher time, multiple time frame analysis by itself. Just understanding the direction of the higher time frame is such a simple thing that anybody in trading can do. And if they really grasp the power of that and respect the power of that simple observation and use it to their advantage, they're going to be better than 95% of traders out there. The 95% that aren't making it or are having a hard time, you know, are changing their trading systems constantly. They're doing something one week, and then the next week they're doing something else, and then they're combining indicators. They're trying to cook it up to find the secret sauce. There is no secret sauce. The market's trend, you need to be able to spot that trend, have enough confidence that it's going to continue, and then be able to effectively enter that trend. And that's all ATS is doing, especially in the basic strategy. It's giving you a map that doesn't change based completely off of price action. There's no settings. You can't change it up. We can't make it form good to the market today and see, wow, look how great it did. But you can see that the lines are programmed to be extremely reactive and to be points of, you know, turning points in the market that give us a very good way to manage risk from. Are they perfect? No, they're not perfect. But they're as good as anything I saw out there, you know, after going through every rabbit hole you could think of, or down every rabbit hole. And you know, and it's again just my opinion. That's it. So if you're looking for, you know, to hang your hat on, you know, what's the best thing to really get involved in as far as building a trading approach or system, or whatever you want to call it, it's whatever indicator you want to use. How can I best identify a trend, and how can I effectively enter that trend with low risk and see if the trend continues? End of story. That's above and beyond support and resistance. It's above and beyond triangles and you know, Gann fans and Fibonacci's and all that kind of stuff. It's about clearly identifying a trend, entering that trend with low risk, and seeing if that trend continues. And the earlier you are to that trend, the better. However you guys want to figure out how to do that, do it. And if someone has a better way to do that, then, you know, what you see on ATS, you don't have to share, but we'd all love to know. So you can post it in the forum. But other than that, you know, that's it. We're trying to keep it very simple, and the tools very simple. You know, don't risk too much, and find a trend and enter that trend. Manage your position. You know, if going off what I'm saying right now, if the trend is the most significant, consistent thing you can hang your hat on in trading, then being able to identify an early trend, going along with what we try to do with the volatility report. Again, we're not perfect every time, but these are things that are early to the breakout, and they have good management points with them that the market has established. They have good points we could work around. You know, that's really it. Here's a pair. It's early to a possible trend, not a guaranteed trend, but a possible trend, and it has good tight management points. Now go find a lower time frame and work with it. You know, that's really, you guys can do that. You don't need our volatility report to tell you that. You got the boxes, you got the expansion lines. Go find an opportunity. So you know, that's really what I would say is the biggest thing, is not getting, the less you guys can get hung up on, and the more you can cook it down to very simple things and stick with that, the better off you're going to be. But I know that's not good enough for some people. They just got to keep cooking things up and changing and looking at the, you know, there'll be ATS, it'll be this week, and it'll be a robot next week, and that's just people. And as much as I've, you know, seen people and work with people, I don't think that's ever going to change. And really, we're not looking for everybody to find, you know, the ATS is perfect for them. If it doesn't work for you, it's no problem. Doesn't hurt our feelings, you know. And that's a reason why we're not charging 5-10 grand to bring people on. There's some people that just have no business trading in general. You know, they're too emotional. They just can't do it. You know, so you know, we want to make the experience as least expensive as possible, and we just want to give you guys solid information. You know, and if it makes sense, we'd love to have you, you know, stick with us. If it doesn't, no problem. So, but yeah, just stick with the basics, and you know, that's usually going to be the best thing for sure. So anyway, don't want to get too much on another rant there. I think we're going to probably wrap it up, guys. I really appreciate you guys coming on. Those of you guys that are sticking with it, really appreciate. We get some awesome testimonials from you guys, and we don't solicit testimonials. You guys, you know, we let your guys' business be your business. We don't care what the money you're trading, all that. We give you a tool. Like I said, if you find value in it, great. If you don't, you know, we don't need a million people to be subscribers to ATS, nor, you know, we love working with the people that are serious, but we're not out to sell this to everybody, nor do we care to. So, you know, but we do appreciate the people that are sticking with it. That's what makes it worth it to do it. We want you guys, the people that get it, to be with us for years and years and years, and that is, you know, it is showing that. So we're really grateful and appreciative to the people that take it seriously and stick with it. And you know, we're definitely getting more and more awesome stories, and people sending in emails telling us about their successes, and it's been really cool. So we're happy for you guys, and you know, really appreciate, you know, working with you and being a part of that success. So anyway, I'm going to leave it with you guys, and anyway, appreciate we still got comments coming in. Okay, any idea when we can expect the update? Yeah, the update it really comes down to that licensing system, guys. Like I said, it's done. The indicators are all done. We just got to get that licensing system done. And it is all up and running. It's actually integrated into the website. You guys can't see it yet, but we're testing it. And there's a whole bunch of little variables that we didn't think about when we initially started. Just little things, even when it comes to like PayPal and how it integrates, and you know, if somebody cancels and then they re-sign up. We get some people that want to take a month off, you know, and they cancel and then they sign up 2 months later. Even something as little as that, you know, we had to manage. How does the licensing system work in all these little variables? It's just been a crazy amount of work. But we have to do that to protect the program, not only for you guys, but you know, this is a proprietary thing, you know, and we want, especially with the new update, we want to keep it special for you guys and the people that stick with it. You know, we want to make sure it's protected for us and for you guys, and that you know, it's a unique thing. So anyway, we're hoping we were hoping the first, you know, yesterday to launch. I would say, you know, from talking to Shane's really heading up most of the testing at this point. You know, I think we're still realistically probably a few weeks out, just to be 100% sure that we got it right. So again, I apologize for taking so long, but just know, even though the update's coming out, guys, you do with ATS 2.0, you guys have what you need to do well. Don't think that the update's going to be the magic thing that's going to make the difference. There are some cool features with the money management lines and things. I think those will help people make smarter decisions, for sure. But the methodology, what we do on the webinars, is not, there's nothing that's going to change. We don't have anything that's like, oh, this is the new secret sauce that you guys need to buy from us in order to really do well. It's like, oh, the ATS 2.0, that wasn't, this is all perfectly fine, what you guys got right now. So any tools that we come out with are just going to take, like the ATS assistant, we got an update coming out from that. That'll probably come out probably a little bit after the new chart map. But that will, you know, any updates we make to that stuff is just going to try to make the methodology clearer and easier, but we're not changing what we're saying. At the end of the day, it's finding a trend, finding a strong entry point, and managing that entry point in an existing trend. That's really the safest you can get. You guys have the information here, you know, and you know, we just stick with it. That's all I can say. So, all right, guys. Again, I appreciate you guys coming on. We still got comments coming through. If I didn't get to one of you guys' comments, feel free to email us at support@TradeATS. We're always here for you guys. And sometimes we do get flooded with emails. If it takes us like more than a day to get back to you, I apologize. And we do try to close over the weekends, even though we end up answering emails and doing that quite a bit of support on most weekends. We try to take those days off to spend time with the family and all that. But if I missed your question, feel free to send it in to support@TradeATS. And we will be more than happy to help you out that way as well. So anyway, thank you guys so much for being on the webinar. and we will plan on seeing you guys Tuesday of next week. Thank you guys so much.